PSLC. PSLC is the PSLC commission because we had excess on PSL. We have grown by 40% on a 9-month basis and 58% on a year-on-year quarter basis. And what it means is that our core non-interest fee, which is most sustainable and doesn't depend on cycles. So PSLC is a cycle business because it depends on what is the premium that is available in the market. The treasury income is a cycle basis. So treasury we had a variance of 18 crores. In PSLC we had a variance of 30. Last year we had a 33.4 crores or something. This year we have got just 3.6. So between these two, 58 crores, 30 and 18, 58. And then suddenly there's reserve provision we have to do another 12 crores. So all of this together, 60 crores is something which appeared out of nowhere this year, right? And which was not our doing. It is a markets. So we had to do our own stuff to ensure we get a better recovery, we get a better fee income. That's one more thing. We have done a very, very good job on the recovery side. And that's what helped us in either upgrading accounts or getting recovery from return of accounts. So overall, I think while the headline numbers looks reasonably kind of a moderate, but when you deep dive into these numbers, which all of you on the call know much better than me, I'm a business guy, all of you are experts of that. When you deep dive, you will see a reasonably consistent operating performance, and every operating parameters are improving by the quarter, which gives me a lot of confidence that you should be able to take the bank forward in line with what we have committed. So I think I've spoken enough. So with that, I stop here and hand it over to Mr. Divakara if you have to say something, and then we'll open it for Q&A.
No, you have covered it elaborately, Pralay. So I don't think anything needs to be said from my side. But in question answer session, if something needs to be supplemented, I will do that. Otherwise, elaborately you have covered all the areas of our performance.
Thank you. So we can take the questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shubhranshu Mishra from Phillip Capital. Please go ahead.
Hi, sir. Good evening. Thank you for this opportunity. Just wanted to understand a bit on the gold loans. One is what proportion of our disbursements is coming from balance transfers from NBFCs and what is getting originated by our own branches organically. Second is, so we've been seeing tonnage growth as well as account growth. What proportion of these incremental as well as on the book are above 3 lakhs and what is 1 to 3 lakhs and what will be less than 1 lakh? Those are my two questions. Thanks.
Thanks, Shubhanshu, for your question. So on your first question, it's around 40% comes from balance transfer. Rest is new to bank. Because we have got a good distribution and the sales strategy on that. So that is, and we have a brand also on the gold loan side of the business. On your second question was on tonnage growth. So what is the question on tonnage?
So tonnage, or tonnage or maybe AUM, we can split it that way. What percentage of the AUM is below 1 lakh? What is between 1 to 3 lakhs? What is more than 3 lakhs on the AUM as well as on the disbursement, if we can speak on that.
Okay. So I think I don't have that exact data in such a breakup, but I can give you some heads up on this. So our portfolio average ticket size is between 1 to 2 lakhs. Okay. And we're coming to disbursement or incremental. our tonnage grew by 49%, while our customer addition grew by some 37 or 36% or something like that, which means that incrementally our tonnage per customer is only going up. Okay. There is a third question also you had.
It was around this only, sir. The split between
Okay.
So basically, one can infer that at this tonnage as well as the account growth, almost 40% is coming from balance transfer from NBFC.
That's right.
Both. Okay.
Or other banks, whichever way. Balance transfer is around 40%, and tonnage growth is faster than the customer acquisition, and our average ticket size is between 1 to 2 lakhs.
Understood, sir. Thank you so much. Best of luck.
Thank you, Shubham. Thank you very much.
Thank you. The next question is from the line of Sonal Minhas from Prescient Investment Management. Please go ahead.
Hi, sir. This is Sonal Minhas. Am I audible?
Yeah, Sonal, you are very much audible. Thank you.
Sure. Thanks for taking my question, sir. Sir, I had the first question on the CASA growth, which is a bit muted. Just wanted to understand from a bottoms-up level as to what is the limitation for the bank to grow its CASA, because the branch network is growing on one. Is it technology? Is it a product? If you could just explain that's my first question.
Yeah. So, no, that's a very, very valid and relevant question. So, you also know that building a CASA franchise is not an overnight job. So, we have to build up a proper CASA franchise. Meanwhile, we cannot wait for that franchise to grow our bank. So, you can understand that in 1 year itself, we have grown the bank from 9% to 25, 24, 26% on the asset side, and liability growth grew to 19%. So the main and CASA cannot grow like that overnight. CASA needs, as you rightly said, product, process, distribution, the right kind of a customer segmentation, acquisition, sales, and more importantly, surround products, which is you need your retail assets, because just opening a CASA account will not give us the value. He has to run his EMI through that account. He has to have his payments through the account and all of that stuff. So on a car side, also you need to have the transaction banking. You need to have the slots only based on the value you create for those customers. These are very complex initiatives. The good news is that we have started most of these initiatives now in the bank. For example, we have started our sales structure. That's why we could grow our number of accounts by almost 75-76% last year. Our quality of these accounts are much better than what we are doing, and hence the value of these new customers are also better. Also, we have launched our retail assets products, credit card products, and hence the payments that will go through, the EMIs that will go through will help us. On the transaction banking side, we have created a separate vertical on that. And we are also building the technology through which this throughput will come. CASA, as you know, whether it's current or savings, is a throughput business, right? One can always buy CASA. So we are not saying that is something which we will do or not do, but most banks, almost every bank does it. So, and it has its own benefits in terms of LCR and many other things. So I'm not saying that's a bad strategy, but it's just that we have not reached there yet. So to that extent, because we are in a hurry to grow in a difficult liability environment, because even established banks like HDFC, Axis, ICICI, Kotak, IndusInd, everybody is struggling on the liability growth. That's why the systemic growth is 9%, and we'll appreciate that in spite of the fact we have grown by 19%. But yes, CASA is a slightly high road, and we have to do the building blocks to reach there. And lot of our retail head here, all of us have built CASA businesses in various, at least 3 large banks before. So we know how to do it, and we will go step by step. There is no shortcut to that success.
I really appreciate the long answer, but is it more the senior team leadership or the technology, basically, which you probably started to see?
Yeah, senior team leadership understands what needs to be done. Technology also, we are putting it there, but technology, as you know, that it takes some time to build, and also the products around it, right? So even if I have myself or my retailer, we have handled the largest products in the market. But that does not mean that I can do it today, right? You have to build those products, you have to launch those products, you have to declare a franchise, you have to run the EMI through the savings account, etc. And parallel, you have to get those customers also. So when all of this together, we understand the complexity of the task. Having said that, I'm not saying that you will see. For example, last quarter, we grew CASA by 16%, our FD grew by 7%, but still CASA ratio came down. That's the nature of the beast, that when you grow faster, even if your CASA growth is faster than FD growth, your CASA ratio will continue to come down. Okay, that's math. Having said that, this quarter I have no such excuse because even CASA itself has come down. But I suppose that it has happened to most of the banks in the system, because suddenly the gap between the SA and the CA and the 10-year GSEC is so high that money is moving. This happens in cycles, so we are no exception. But yes, I'm not shying away from, I'm being very honest about it. We have to do a lot of work to build a CASA franchise, and no bank has done it in short time. No bank has done it.
No, I agree. So, but is there a timeline? Like, for example, you have timelines for everything, and that's very, very good to know on each of the calls. Is there a timeline where we can say that the CASA product, the technology, and the system is basically fixed? Maybe 1 year from now, or 18 months, or 2 years from now, and hence we are on a growth path from there on, because that's a sustainability bit for the bank.
Yeah, I'll give you a answer for this, clear answer. You will start seeing CASA growth for us within the next 12 months. Okay. Having said that, the real CASA franchise, it will take 2 to 3 years to build. Because what is a real CASA franchise? When you look at HDFC, ICICI, Axis, etc., a real CASA franchise is when you have at least 2 or 3 relevant products with a customer, and his EMI runs through that product. When you have a customer segmentation starting from a high net worth to that pyramid structure. When you have a transaction banking where you do collections, you do CMS, you do everything part of supply chain. For this, I need technology which we are building. We are changing our core system, by the way. Okay. So, core system takes anywhere between 15 to 18 months to fully get operational if you are lucky. Okay. And the surround system in parallel we are building. So we have on our project management tool, we have put all these timelines, as you rightly said. Having said that, none of you will have the patience for me to play out these timelines. This will happen 3 years down the line, 2 years down the line. But meanwhile, I have to also ensure that next 1 year we get our CASA growth, and we know how to get it. We are going to execute that, and you will see the CASA growth within the next 1 year.
Thanks a lot, sir, for this answer. I have a second question, if I may ask, if I'm allowed to.
Yes, please. Yeah.
Yes, sir. Sir, similar question on SME. I wanted to see the SME book, and it's been kind of flattish, not making any critical remark or whatever, but just wanted to see and understand, is the market actually somewhere not of high quality, because of which basically you have tapered down the growth of that segment? You're not happy with the quality of approvals which are coming in SME? Just want to understand from a market perspective and then drill it down to your company. Yeah.
So I'll give a very honest answer here. We have an old book in SME. Okay. And that is also running off. So while we are disbursing a reasonable amount per quarter, but we are also running off some part of the old book. Okay. And some part of the old book is running off, is not making me very unhappy also. Okay. Because we may not, when I want to look at those books on a risk adjusted basis, I may not like to have that book with me at that point of time. So I'm okay with running it off. So in the process, I'm strengthening the quality of the SME book. I am adding more business on our fresh disbursement and fresh customer addition, but still my growth is not coming. That is one part of the answer. Second part of the answer is that we have when we have limited liability, and I have businesses which are coming at yields which is giving me almost zero risk. Okay. And I have to give other ratios and other returns in the short term. I know this is not a very long-term good strategic view, but in the short term I also have to deliver. So where would I deploy that when I have limited liability? So given that because I have to also raise money for investments into technology and distribution and other CASA, which you talked about. For that, I have to very tactically deploy that. And as long as I'm able to deploy at a much more ROA, please appreciate my ROA is 2.37 this quarter. Okay, and that ROA is required for my investment into this thing. So when they're getting business at a particular yield, I'm refusing those businesses. And in spite of the fact that HDFC, Axis, ICICI, they are happily doing those businesses. And not a bad business to be, but on the risk-adjusted basis and on the NIM I have to get, I am saying that I will rather deploy the liability somewhere else than taking those businesses. That's why, to some extent, our SME and wholesale hands are a little tired at this point of time. But I also understand the value of franchise, so we are building those franchise as well as in parallel. Okay. So I also believe that in the market, gradually the risk-adjusted returns are gradually starting to show now. But till now, the risk-adjusted returns on SME was not, at least it didn't suit our appetite. Okay. So to that extent, we are a little careful in the SME part of the business, given the risk-adjusted returns we are getting.
I understand that.
Having said that, now we are also, the other banks, what they do is, they will do those lower risk-adjusted return, and then they will do a lot of income through cross-sale of other products and other relationships. We don't have, not only top-up, but other fees and liability and other businesses, CMS, supply chain, so many other things. So they have vendor financing, all that on the wholesale side. So since we are launching those products gradually, since we don't have those on a ad hoc basis, we don't have those income as yet, for us taking those decisions purely based on NIM or spreads is not as easy as it is for some of those other banks. So we are competing in a difficult market. So that's why we are saying that we will be prudent in the way we build these businesses. But in the long term, let me tell you, our long term is very clear: 30% retail, 20% gold, and rest half and half between SME and wholesale. Maybe SME is around 20-21%, and wholesale will be around 30%. So that is not going anywhere. Okay.
Got it, sir. Thank you a lot for your answers. I'll come back to the case. Thank you.
Thank you. Thank you.
Thank you, sir. Thank you.
Thank you. The next question is from the line of Pratul Shah from Anubhuti Advisors.
Yes, thank you for the opportunity and congrats on good set of numbers. My question is with respect to the growth in advances. So YOY we have seen that advances have grown by 26%. However, gold loan book has grown by 51%. So basically, other than gold, the book has only grown by 10%. So just wanted to know that why this is not increasing in tandem to the overall loan book. So you already spoke about SME, but if you can give a highlight on the corporate loan and retail loan, that what's the outlook on that?
Sure. No, absolutely. Great question. So let me start with retail. In a way, I covered it in my first question, I think, that we are building the retail franchise on the back of technology, products, and processes. Retail assets build out takes at least 12 to 18 months. But good news is that we have started our journey, and we are starting to build. This includes retail, agri, it includes microfinance, it includes the entire retail assets business, CV, CE, home loans, HCF, healthcare, all of it together, credit cards. So good news is that now we have started each of these, but to see visibility of this on the balance sheet, you will need to give us at least a year. Okay, so that's on the retail side. But retail, we are firmly on play to gradually build these products, and it will gradually show up. SME I have already answered, so I don't want to duplicate the answer. On the wholesale side of the business, what we have done is, we have two parts of the portfolio. One is the DA portfolio, and one is the normal wholesale business, which is primarily mid-market, emerging corporates, and we have a little bit of an NBFC portfolio also. So from that perspective, I think there again we have to build out products. We are increasing our coverage strategy. Wholesale is around 30% of our overall portfolio, including DA. So there is in fact today only with our head of wholesale I was just discussing before that how do we need to increase our coverage, etc. And also please understand that our quality of the portfolio incrementally we don't do never below triple B, and most of our NBFCs are A and above. So given that perspective, I think we are very conscious of the risk-adjusted return. That's why we are very carefully building it up. Wholesale franchise does not take that kind of a time what a retail franchise will take or a SME franchise will take. I mean, retail will take longer, SME will take medium, and wholesale will take shortest the day we want to really press the pedal there and grow. So, but yes, still we need to create those transaction banking, and also with the size of the balance sheet which we have, our wholesale team will not get an entry into many of the places where they want to. That's why they're choosing the right segments where we also, and also, we are very conscious of pricing we do. So that's where we will remain at this kind of a level for the time being. And we will, but we will start seeing some, in terms of business mix, it will not change too much from here. I mean, gold loan will be probably below 50%. SME will be around 12 to 15% in the next 6 months. And wholesale will be remaining, including DA, somewhere around 30%.
Okay, got it. So just can you guide a number to it that other than gold loan, this SME, retail and corporate loans, what is the growth in loan book that we are expecting going forward in this book?
So I understand your question. So from here on, if I take growth on SME and wholesale, only assuming that's the base where we are sitting on the base, on that how much will grow on retail and wholesale, retail, SME and wholesale, and retail includes agri and microfinance, we should be able to grow somewhere around 15%.
Okay, got it. Thank you.
And beyond that, I don't want to, I'm telling you, practical, I don't want to do it. You know why? Because I have to continue to deliver the name till our technology is in play, because I have to make a lot of investment there. So my constraint is liability. So if I have 20% growth in liability, and if I have 25% growth, I mean hypothetically, I'm not giving a forward-looking number. Suppose I have a 20% growth in liability with a CD ratio of 81%, and if I have asset growth of 25, I would still like SME and wholesale to be around 15 and rest coming from gold, purely because it's a tactical play for the next 1.5 years.
Got it, sir. Got it. Thank you so much.
But again, long term, I told you that will remain. 20, 30, 20 gold, 30 retail, 20, 21 SME and rest wholesale.
Thank you. The next question is from the line of Zared Chaudhary from Green Portfolio. Please go ahead.
Yeah, good evening, sir. So I have a couple of questions. First one is that our employee costs have been growing at a faster rate. And for last 3-4 quarters, our business per employee has been falling. So when can we expect this to bottom out for the business?
So, have you all your questions, or I'll answer this? Okay, let me answer this question first.
Yeah.
Okay. So there are two ways of looking at it. Business per employee, I mean, you take cost line only. So if you look at our overall cost to income, that is within control, right? I mean, I've said 55 to 60, we have remained there. And when I have given that kind of outlook, I have considered that our employee cost will continue to go up. Business per employee is something where you have to understand that we are adding lot more frontline stuff in terms of acquisition, sales. Somebody asked a question on how will you build retail assets, how will you build retail liability, how will you add more accounts, how will you build CASA. That can only happen when you expand a huge sales force out there, but they come at a very reasonable cost, right? So they are not very costly resources. So business per employee will always be a little bit of a challenge because we don't outsource too much of our employee outside. A lot of other banks, including all my previous organizations, especially assets and our cards and all these other businesses, everything is outsourced. The frontline sales stuff, DSA, all of that. So we are not doing too much of all that. So given that perspective, my business per employee, I am not giving an outlook where it will improve significantly from here, because number of employees will go up, their cost will go down, because the front-end sales stuff is going up big time. So that is on that front. My cost income will remain between 55 to 60, closer to 60. That's not because of employee cost. That will be because of technology cost. Okay, and I'm telling you, next year we'll see huge investments is going to go into technology in terms of both capex and opex. Okay, so that's the first question. That's the first.
Yeah. Next question is, so the company recently issued a new credit card with one card. So if you can just number how many cards were issued in the recent quarter?
So we have just started.
Okay.
So it's not the number which is too much of importance at this point of time. And also what happens is, you must understand, as a franchise, we have limited credit qualified customers whom we will offer all these products. So we have to add new customers in the coming quarters. So this product is also in a way not to build a great credit card business, but to get new good quality credit qualified customers to the bank who can also build CASA, which I have already told before in my previous calls. So given the perspective, I think we have just added around 2,000, 2,500 cards now. Maybe next quarter we'll add another 10,000 or so. But more importantly, I want to see this as one of the other products, because we don't have too many products at this point of time. This is one more product, and it's a very premium product. If you see this product and see the values and digitally enabled product, we think that this is one more way to knock the door of the customer to open a relationship with us. And our strategy is not cross-sale of credit cards to CASA. Our strategy is cross-sale of CASA to credit card customers. So, because we need to build up a better quality CASA franchise, which will take a little time. So, credit cards is a very important business for us from that perspective.
Okay, yeah. Understood. I had one last question. It's more related to the recent news and related to the Adani. So, do we have any exposures to the Adani group in a corporate loan book?
I was jokingly saying before this call started that this question is going to the other banks, it will not come to us. Because we don't even have the balance sheet to give loans to Adani. I mean, we can have a 50 crore CD or something, etc.
Yeah.
But that is nothing. But otherwise, we don't have any exposure.
Okay, thank you. That's it from me.
Thank you. The next question is from the line of Mona Ketan from Dollars Capital. Please go ahead.
Yeah, hi sir, good evening.
There is a sound. Mona, just hold on. There is, now it is okay. There is a sound that was coming in there. Yeah, Mona, go ahead.
Yeah. So, firstly, on the SME side, if you could share the disbursements made by the bank over the last 3 quarters, the quantum of disbursement, that will help.
I'll just tell you, I think last quarter or last
quarter, Q1, Q2, Q3, it will be useful.
So I think we have disbursing incremental disbursement, pure play disbursement is somewhere around 350 to 450 crores. I don't exactly remember the number, somewhere in that level. Last my review I saw that. But we have lost more than that in terms of either we have run them off or utilization has gone down on certain places because of rates and things like that. So broadly around 350 to 450 crores of disbursements we have done.
Okay. And we've seen some BTLs as well.
BT, yeah, I mean, SME, you know, lot of BT happens in SME, na? So BT will be a part of this. Yeah.
Okay. And when it comes to your advances made, what would be the share of EBLR and MCLR loans in the pool?
Our mostly wholesale is on MCLR, okay, and most of our SME is EBLR. So, but this is becoming lesser relevant anymore because interest rates are peaking right now, right? So, the benefits of these are gradually going to fade away, and impact of cost of funds will start kicking in. So that's why I said in the beginning itself that 5.8, don't read this too seriously on the name.
Right. So wholesale would and SME together would be say about 30% if I have to exclude the direct assignment and stuff.
Gold is around 40, wholesale is around 30, SME is around 12, 40 plus percentage.
Okay.
Between wholesale and retail. Wholesale and SME, 42%.
Okay, and gold would be entirely fixed. Okay.
Gold is mostly fixed only, mostly fixed. Because these are short tenor, na? Gold loan is short tenor, it doesn't matter.
Got it. And on the deposit side, so we have seen a very strong sequential growth at 8%. So if you could just give some color of where the sequential growth is coming from. Is it largely led by wholesale deposits, certificate of deposits, etc., or a larger share is by retail deposits?
On CD, I must say that we are lesser than where we started the year with. Okay. So, our CD book is, if I don't know whether we give the data or not, but it is somewhere between 300 to 400 crores. When we started the year, it was higher than that. So, I don't think CD actually has come down, not gone up. I'm not saying it will not go up again, but it is just, it is not that material. And among most of the banks, our CD, our component of CD in our deposits as a percentage also is one of the lowest. So, that's not there. On the wholesale question which you said, depends on what is, I just want to clarify because it's a recorded call.
No,
there is
so interbank deposits. Yeah.
No, interbank is not there. Okay.
Okay.
On wholesale, I thought that, see, there are two definitions.
Above 2 crores.
One is what wholesale group gets, okay, which are mostly short term and things like that. And the other one is what RBI classification says are wholesale, which is also retail, but they're treated as wholesale. So our that, like most banks, we also have on an incremental basis last quarter more than 50%, almost 60% of our business by RBI definition is wholesale. Okay. But you can easily say, look at another ratio and see what the question you are asking is what is our LCR. We ended the LCR as 124%. How many banks have really done at that kind of a percentage? So that cannot be a purely wholesale kind of a thing. A lot of these are retail actually. So deposit franchise has to be seen in 2-3 parts. What is the overall cost of funds of the bank? What is the tenor of the portfolio of the deposit? What is the LCR of the bank? And what is the CD of the bank? Okay. So CDA, we are one of the lowest, and I told you it is between 300 to 400 crores. Now it has come down actually because it has run off. Some of that has run off as we are talking. Our LCR is 124. Our cost of deposits, whatever, 4.8 or something like that. And that will give you the answer where we are.
Right, sure. And when it comes to your loan to deposit ratio, what would be a comfortable level to you? Where could it peak rather?
See, I would, in the current scenario, I will say that I'm willing to go up to 90%. But I was quite pleasantly surprised to see we coming down this quarter at 81% from our 84% last quarter. But 84 or 85, I don't remember, I think 85. But it has come down actually this quarter. But that may not be the trend. I mean, I think in the current regime with liquidity where it is, 85% is par for course right now.
Okay, sure. And just lastly, we have seen very low slippages, good recoveries in your case. Especially this fiscal, close to 1% kind of slippages is what we are seeing. So, what is your guidance on slippages from a normalized perspective as we go ahead in FY2024-2025? Where could the normalized slippages be for CSB Bank?
We are a very conservative bank. Our management is also very conservative. So that's why you are seeing some of the growth which you are not taking because on SME and wholesale because of risk-adjusted returns and not in line with what our conservative thought process is. Okay. Gold loan, anyway, the NP and the slippages are very, very low. Okay. Slippages can happen, but you recover that. So gold loan is not a real issue. So, and some of our old portfolio on the retail, which was slipping, that is now started and that is now gradually going to become negligible over a period of time. So, and we are also getting upgrades and recovery from some of the old SME portfolio and the retail portfolio as well. Not so much retail, but more from home loans, LAP and SME portfolio. So, given this perspective, I cannot give a guidance on this. But I'm very happy, I'm sure you are, that we have a negative credit cost today. Very few people have negative credit cost. We have traveled the whole year with that kind of negative credit cost. And I hope that we can continue that for this quarter as well. I don't know. Hopefully we will. But next year, obviously, will not be a negative credit cost. But in terms of slippages, I think we will continue to be good. Okay, I don't see, because neither we have a chunky kind of, except for one or two accounts, we don't have too much of a chunky business, nor we have too much of a stress in our portfolio. And anyway, we are holding a contingency provision. We don't know how to take care of that, so we are constantly working with our auditors. So we have a contingency provision of 106 crores in any way. So to that extent, you cannot adjust that, but you can have a formula for that over a period of next 3-4 years. So to that extent, I don't see a major challenge in terms of slippages or NP or credit quality. But we may not have a negative credit cost. That is unreal.
Sir, thank you and all the best.
Thank you, Manu.
Thank you. The next question is from the line of Pallavi Deshpande from Sameeksha Capital. Please go ahead.
Yes, sir. Thank you for taking my question. I just wanted to understand again a bit more on the deposit growth. What would be the outlook going ahead? And again, like you mentioned, you have to balance between savings and terms, so we can expect more term deposit growth. Would that be the strategy for the next 1 year?
Yeah. So if you have to see, at the end of the day, when you are sitting on a 81% CD ratio, and I've said that our comfort is at 85 and we won't like to breach 90. So which obviously means that if we want to grow at the same kind of a level for asset, we need to grow at least around 20% on the deposit side as well. Now, some part of that will happen from term deposits because CASA takes its own time. Having said that, we will grow on this quarter on CASA as well. We have put our strategy together, thoughts together, and we'll build CASA as well this quarter. We have launched some products on the both savings and current account side. You will see some growth on the CASA because I know that in our entire good operating quarter, that's the only black mark which we have, so we don't want any black mark next quarter. So we will have our CASA growth as well. But frankly, TD growth we have to sustain because when you are growing the balance sheet from a 9% last year to 25% this year, I mean, so far, I'm not making a forward-looking statement. And in one quarter, drastic change obviously cannot happen. So we need to have some dependence on term deposits as well because CASA will not give you overnight growth. But we'll try and see that our CASA does not fall below 30 because that's psychologically not a good level to be here. My challenge here is mathematically, even if you grow CASA faster than TD, it will continue to fall below 30 till CASA ratio goes above 35-38% or above 40% mathematically. So we have to solve that maths ourselves. So we'll see how to do that.
Yeah. And like you said, so we'll monitor the SDR, which has been out. Despite the black mark, that's been the blue mark, I would say.
Thank you, Pallavi. Thank you.
Right. So secondly, on the PSLC, do we see that coming back in fourth quarter, or this year is a complete washout? PSLC.
Let me put it this way: I am not factoring that income in my projections. Okay, if something comes, that bonus. But my theory is like this. I don't know. This is a kind of a conjecture, you can say, that this year what had happened is credit growth picked up to 16-17% in the ecosystem, and NBC was previous year's NBC. That's why this year in the whole system there was not too much of a stress on PSLC, and hence there was no premium on PSLC income. Okay, because everybody would have probably achieved their PSL targets. Next year, what will happen? The reverse may happen, that you will sit on a higher NBC this year, and next year growth may actually taper off a little bit. And even if growth happens, it will happen not necessarily in PSL-oriented businesses, right? Like if your wholesale start picking up or some parts of SME picks up, etc., they might not contribute straight to the PSL business. So given that perspective, it's not all lost cause. All this portfolio will remain with us next year. So we'll be able to get hopefully some PSLs income back next year. But this year, last quarter, how many people will be short and how much? Because if they had to buy, they would have bought it by now. Why should somebody wait for the last quarter? I'm not so sure. But we are monitoring it daily, especially in the month end, quarter end, we'll monitor it more daily. And because we did it last quarter, there are only 3 days window where we got a 0.9% on PSLC, and we picked it up and we got that 3.6 crores. Just 3 days window we got, and we used it like an opportunity. So we'll watch that, and if we get that opportunity, we'll get it. I mean, whatever we can, because it will otherwise zeroize at the end of the year, no? So we'll get whatever, but I'm not so hopeful.
And so lastly, on the recovery side, we've seen, I think the other income portion, other income has shown a good growth. So can we expect similar kind of recoveries next year, or will that be better?
I can only talk next quarter. Recovery is something for next year very difficult to predict. But our machinery is on, and our team is fully geared up for a good fourth quarter. Okay, next year we can discuss, and then maybe next call.
Right. Thank you so much, sir.
Thank you, Balu.
Thank you. Next question is from the line of Sonal Minhas from Prescient Investment Management. Please go ahead.
Hi, sir. Thanks for taking my follow-on question. I wanted to understand the corporate loan book, sir. How does this work specifically in terms of you needing sorry, there is some noise. So I just wanted to understand the corporate loan book, and in the corporate loan book, are you the lead banker, or this is part of a consortium? That is how we try and build basically a corporate loan book.
So generally we don't do consortium lending as much, because there's no point participating in a consortium when you don't have a say. If you see, almost 35 to 40% of our portfolio is NBFC in the corporate book, if you look at it. And rest is mostly distributed lending, okay? But it's mostly one-on-one kind of a lending. We don't do multiple banking, but not consortium. Okay.
I understand that. And so, at a corporate level, maybe just trying to understand is there a distinct reason a corporate or a new corporate would come to CSB? Is that because of the geographical reach, or is that because of the interest rate, or you in a particular geography you still let's say maybe giving a discount over a larger bank in the same geography? Just want to understand the dynamics of this business when you take up a new client. Is it price? Is it your relationship? Just trying to get to that.
So corporate banking is mostly about relationship business. Okay. Mm-hmm. So on the financial market side, on the NBFC side, we have been operating with, and people knows that we understand that part of the business, etc. That's why obviously we have our ecosystem, and we have some amount of expertise on that business, so which we are leveraging on. Coming to other parts, what is happening is that, people, when they join us and we are expanding our coverage group, etc., primarily it happens based on the relationships people have and the products and services and the geography. Of course, we are a little more stronger in certain parts historically, but we are now expanding significantly in the Western North. We have got very good leadership in Western North, and as we are talking, we are also expanding we are building our leadership in the upper south part, which is AP and Karnataka. So while our strength was always there in Tamil Nadu and Kerala, but now we are getting stronger in AP and Karnataka, and also Maharashtra and North. And we have built up leadership in each of these locations. We have clear vertical segments where in fact, our board has guided and our credit committee has guided in terms of which kind of segments where we can get the right kind of risk-adjusted returns, and we are focusing on those segments. And also, it's a relationship business and the coverage business. So all of this put together, ultimately, with all of this, we have not a very large book. So to that extent, this strategy works for us right now. In the long run, we have to build up our strategy based on solution products, transaction banking, and other supply chain, vendor finance, etc., between SME and wholesale, that we are working together.
Understand that, sir. So my second question is maybe beyond the results. I just wanted to get a sense of the promoter group basically and them trying to bid for IDBI. I'm sure this is not a relevant question, but can I ask this question, or this is beyond the results discussion call?
We are a democratic country. You can ask any questions that I cannot answer because I don't know. Okay, that's the truth. I mean, what Fairfax is doing and what is their plan, they will. I mean, I have been told to organically build this bank, and I'm clearly focused on that.
Understand that, sir. Okay, thank you. Thanks a lot, sir.
Thank you, Samir.
Thank you. The next question is from the line of Jyoti Khatri from Alien Capital. Please go ahead.
Yeah, sir. Thanks for taking my question. One thing I just want to understand on the OPEX side, you said that you will be investing in technology and people over the next, 1 or 2 years. So any number to put up there that how much, OPEX and CAPEX cost that you would be, you have in your mind?
So let's break up OPEX into 3 parts. Okay, one is technology. One is technology. One is distribution, one is people. Okay, these are primarily 3. Rest are relatively smaller amounts. So when it comes to technology is again divided into 2 parts: capex and opex. Okay. Now, CIO Rajesh Chaudhary, who's a great guy. So I have told him he can run as fast as possible. Whatever he can run, we will fund it. Okay. And I'll ensure that our business teams are tasked to get those revenue to the bank. Okay. Now up to him how much he can do. I have given him a whole laundry list of what needs to be done. Okay. Starting from core banking to LOS, already we are implementing 3, 4, 5 products already have implemented. Some more to go. Now on the LMS we are finalized. On corporate LOS we are doing it. On corporate net banking we are doing it. On mobile banking and net banking we are revamping it. Core banking itself is a huge task. I don't want to open it up into that detailed discussion, but let me put it this way. I have told that this is one investment. I will not, because faster I get it, faster my payback period will be, because in parallel with that I am making other investments in terms of distribution. Right? Because of technology I'm expanding distribution, I'm not able to leverage that. That's not very prudent, right? So to that extent, technology is as much as he can do. On manpower, etc. We have got a productivity chart given to my retail head, to my SME head, to my wholesale head, and if I said that will not stop anything as long as you manage this productivity, you please hire. But if you don't manage the productivity, you cannot hire. Okay. And when it comes to distribution, I've said that we'll have around 100 branches per year. And as our technology score starts tapering down, we will go beyond 100, because I fundamentally believe branch is also a way to build distribution till you have at least 2,000 branches in this country. So to that extent, we will start expanding the part, but I cannot take both the distribution cost and the technology cost together. Technology cost will start tapering in the next 3-4 years, and then we will pick up the distribution much larger than 100 per year. So that's broadly what it is. How much? I don't know. I mean, I can't give that number depending on the stamina of our leadership team. But broadly, back up the envelope. I think we should be. I mean, I don't mind in investing into almost 70-80% of our yearly profit also into these three OPEX items: distribution, people, and technology.
Okay. And so, I mean, from a cost to income perspective, we will see.
I want to qualify this. When I said this, I'm not saying per year. I'm saying on a project basis. For example, next 3 to 4 years kind of an investments I'm talking about.
Okay. So from cost to income perspective, we will see. So it should remain about 60% levels.
Yeah, that I always said that we'll not go below 55. We'll try and not go above 60. We'll be closer towards 60. But by FY2030, we'll be between 40 to 45.
Okay. And another thing was, how crucial will be building up the retail, liability. Assume that if it doesn't go through as per your plans, it could derail your entire, strategy of building up a retail, franchising. Is that so? Because I think currently everyone is facing challenges in building up retail deposits. So that is the one important crucial part in that entire, retail franchising.
If we can't build that, we don't have a story either to tell or to build it. So I will start from a belief that we can do it, we have the ability to do it, and most of my management time has done it time and again in past in various large organizations. So there is no way I will even think that we cannot do it. Okay. Question is, and we will see. I mean, for example, in most of the investor calls, what I have said in past, we have delivered, right? I mean, look at today's call. We have almost delivered everything we have said. So I don't even want to get into a discussion. If it does not happen, that question doesn't arise in our mind. But yes, it's a tough journey ahead, and we know how to do the building blocks. That's why we are not taking a shortcut to success. We are saying we'll build a franchise, we'll go step by step, we'll build the distribution, we'll build the leadership team, we'll build the technology, we'll build those products. That's why I'm not committing anything which is unachievable. I've done it 3 times in my past experience, and I know step by step how to do things, and hence we are not committing anything which we cannot do.
Okay. So just last thing on, on the margins and the credit cost, any outlook, for the next fiscal?
Margins I've said before, I'm repeating because you will see in most of the calls, my numbers don't change much. I'll be happy with a NIM of around 5%. Okay. And in terms of credit cost, we can't have a negative credit cost, but we will, on a 3-year basis, will be below 40 basis points. Next year, obviously, will not reach 40 basis points. So it will be lower than that, much lower than that, but it will not be negative also.
Okay. Got it. Yeah, thanks.
Thank you. The next question is from the line of Dharma Venkateshan KB, an individual investor. Please go ahead.
Good evening, sir, and thanks for the opportunity. So my question is more on the MSME book. So have we explored any co-lending opportunities with the fintech or all of the loans being originated from the bank? So can you give some color on that?
Yeah, what is happening is we were doing some business on the fintech side, but because of the new digital lending advisory or guidance which has come from RBI, we have gone back to the drawing board again, and we are seeing how this will work out. So we are talking to few partners, and we are working on it. On the other co-lending, which is little larger, there is a technology development that is required. We are also working on that. So yes, that is very much in the thought process. That is a large part of our strategy. But I think that we'll take little time to create the framework for that strategy. But if you ask me this question 2 years from now, I can show you how much business we have done in this.
Okay, sir. And how many branches we have opened in this quarter, in this particular quarter?
In this quarter, around 40 branches, I think.
Okay, sir. And my final question is that it's more of a generic question. Sir, suppose we are building up for the future, we are implementing in technologies and other aspects, we are building a CASA franchises. So, do we need any management bandwidth in tier 2, tier 3 levels, or what are the other things you need on your management bandwidth to achieve the level of growth that we are aiming from maybe say 5 years or 10 years from now?
Sir, our issue is not the tier 2, tier 3. We are very well placed there. And that's why you will see that we are the net seller in PSLC all the time. Our primarily where we have to work on is how do we build a franchise for the metro and urban markets. Okay. And that's why we need multiple products, multiple premium businesses. I can't say premium, but at least mid of the pyramid to going towards top of the pyramid. So our challenge is very different to some of the other banks who are trying to grow from metro and urban into deeper geography. So we are coming from deeper geography to metro and urban. So basically basically it's a full franchise if you have to build, because in these metro markets and urban markets, if you have to be present profitably, you have to have a full service franchise, and that's what we are working on. So our challenge is exactly the opposite.
Maybe my question didn't get through properly. So my question was that on a management level, like on our management bandwidth of tier 2 employees and tier 3 employees, like do we need to, how much bandwidth we need for the growth that we are anticipating 5 years now, from now, or are we very capitalized on the management side is what I was trying.
So let me try and answer that. So you know what, because we understand that gold loan business very well, in the tier 2, tier 3 markets are very good on gold loan, agri, MFI, these kind of businesses. And because we are very good in some of these businesses, rest of the businesses we do understand, liability, assets, retail assets, as they grow deeper, as we create credit structures, and also digital is becoming a major part even in deeper geography. So not necessarily you have to have so many people in those locations to run the businesses, okay, except for gold loan. Gold loan is a very physical business and which you understand. So most of these branches in the tier 2, tier 3, tier 4 kind of towns, gold loan itself gives us very quick turnaround in terms of profits. So, but they don't make big money, right? The smaller branches don't make big money. So to make big money, you have to have in larger presence and higher end of the pyramid in metro and urban markets, because all large banks have top 20% customers contributing to more than 100% of their profit and 80% of the revenue. And that is one pie which we have to build. We are not present in that segment as yet. We are building that. And that will take 3-4 years to build. Management bandwidth, we have enough present in the deeper geography. That's not a problem.
Okay, sir. And just one more final thing. What is our the top 10 or top 20 deposits and advances concentration? Like top 20 or top 50?
Top 20 deposit concentration, I don't know whether we give that number or not. Mr. Divakar, do we give that number? Then can you share?
But later on we can, if need be, we can furnish that information.
Maybe on one.
12%.
Oh, on the advantage side or on the deposit side, sir? That is
deposit side.
Top 20 depositors. Top 20 depositors are around 12%. And we are trying to bring that down further. I forgot that number. I've seen that. So we are going to bring that down that number top this thing over a period of time.
And similar number on the advances side?
Sorry?
On the advances side, similar number on the advances side?
Advances, nothing. 47%, 45% of our business in gold loan, which are all less than 2 lakhs. Okay, so it is not very relevant.
So we don't have any major exposure to one particular person or a company. That's what
we may have 2 or 3. We may have 2 or 3, but they are less than 300 crores.
Okay, sir. Fine, sir. Thank you, sir, and good luck for the coming quarters.
Thank you.
Thank you.
The next question is from the line of Anuja Dighe from Elara. Please go ahead.
For the opportunity, I just have one data keeping question. I think we have realigned our loan mix this quarter. So may I get similar kind of numbers for SME, corporate and retail for last quarter?
I think it is there in the investor presentation if you look up, but if I remember it correctly, our gold loan was around 45%, but you can check it in the net. Our gold loan I think was 45%, our SME was around 13%, 12 to 13%, and DA was around 5%, and rest was on the wholesale side.
Okay.
Around 27% was on the wholesale, I think.
Okay. And also another small question. If I'm not mistaken, you mentioned that according to RBI definition, the wholesale deposit base is around 60% of the book. Is it right? Or is it 16?
I didn't say that. Let me first clarify what I said.
Mm-hmm.
The wholesale by definition, by RBI definition, if I remember it correctly, more than 2 crores is called wholesale. Okay? It can come from any individuals also. I think more than 2 crores, anything. If NRI gives a 2 crores, somebody else gives a 2 crores, I think more than 2 crores is wholesale. I'm not able to remember exactly, but I think so. Okay. So what I'm saying by RBI definition, which is large ticket, any large ticket, which is as per RBI, you have to classify as a wholesale deposit. Not necessarily the depositors come from a wholesale.
Mm-hmm.
Okay. So that more than 2 crores incrementally last quarter, around 50 to 60% of our business came from that. Generally, it's around 30 to 40%, but last quarter we focused a little bit on more around 2 to 5 crores of deposits because we needed to grow the deposit last quarter. Okay, it was only incremental for last quarter, not our overall portfolio. Our overall portfolio is pretty much very granular, more granular than most of the banks. Okay, even now.
Okay, sir. That's clarified. Thank you, sir.
Thank you. Ladies and gentlemen, this was the last question for today. I would now like to hand the conference over to the management for closing comments.
Thank you very much. Thank you, Manish and Axis Capital, for organizing this call. And really thankful to all the investors and analysts for being such active and enthusiastic questions. I hope I could respond to most of the answers. And again, I would like to say that I'm happy that we could almost deliver all the parameters on a consistent basis. And whatever we have committed, we'll work very hard to ensure that we don't disappoint you. Thank you very much. Have a good evening.